I got my butt kicked and I feel good about it. Let's find out why. Hey everybody, this is Spooky's Revenge. I am back from vacation. I am sick and I got my butt kicked in the market today. But that's okay. I took a little bit of a risk. Let me get my face down here a little bit. So today, as you can see, there's a huge red number in my account, down $400, and that's okay. It actually provides a really good opportunity to kind of demonstrate what we can do in situations like this, because, you know, not every trade's going to be perfect. Obviously, I broke my trading plan. I was a little bit of a degen today, and that's okay, right? Because it just happens. But we're also getting towards the end of the year, so this was partially a calculated risk. Obviously, I knew it was either going to go up or down, right? So I wanted it to go up. It didn't. It went down instead, but I can use that to my advantage. So it's nearing the end of the year. And what that means is that I need to start focusing on the losses that I take, because those offset the tax burdens on my profits, dividends, and other forms of income, up to a certain amount, obviously. Now, if I go over on my max deductions for losses and things like that, it's okay. There's indefinite carry forward. So, you know, if I lose $10,000 in 1 year, for example, that's just 3 years at $3,000 max, and then an additional $1,000 on that fourth year. So I'm not too worried about, you know, how much I gain or how much I lose, because it all kind of balances out as long as you play your cards right, and that's what I'm doing. So in this case, obviously, again, I wanted the price to go down, which means I wanted my profits to go up, but that didn't happen. So because I have protected myself, I've put plans in place, it didn't hurt too bad, right? Now you might look at this and say, oh, you lost 24% of your account, blah, 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 blah. And that's true. It's not a easily digestible loss for a newer trader, but I'm not a newer trader and I'm okay with this, right? So if we look at this, the setup was there, right? We identified the liquidity zones. We identified where the institutions were. I placed my final buy right here on this, right in the middle of this liquidity zone. It was a beautiful trade. Impulse to the downside, blah, 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 blah. We went all the way down here. Then we got a double bottom and it bounced, and that's okay. So I got the right move, but I got the wrong contract. So I was trading a 0 day. I knew it was Monday. I knew it was an earnings heavy week with Fed catalysts. I probably should have pushed it out a couple days, but I'm sick and I just didn't really focus too much on it. So I ended up getting caught on that and got burned. Obviously I overcommitted intentionally. If I was just trading this like regularly, I probably would have just bought one contract for like $40 and just let it go, because it is SPX. So that is something I don't intend to do, other than just for this, right? Because I'm just kind of demonstrating that, you know, this is something traders do all the time. They hurt themselves. And there's a couple points that I need to make right here. And the first is that I'm not going to give up my tax advantage by re-entering this position for 30 days. Realistically, I'm going to add about 60 days. I'm not going to trade this again until January. Okay. And that's what I did. I traded this back in September. Now we're in the beginning of November, so I don't have to worry about losing the loss that I traded. I trade win, 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 win. Once I hit a loss, I stop trading. And then if I don't touch it for another 30 to 60 days, I get to claim 100% of that loss on my taxes. And they offset my dividend income, realized profit, short-term capital gains, long-term capital gains, up to $3,000 in the realized profits category, and up to another $3,000 in my salary and income category. Now, of course, I'm running a business and I have all these other deductions and stuff, so I don't really care too much about the specifics of how it impacts me. But it does help, and it's every little bit helps when it comes to realizing P&L, because I've shifted a lot of my money on my larger accounts into positions that I don't sell. I'm just racking up positions, shares, dividends, rolling it into passive income. And on those accounts, when you are racking up massive amounts of passive income and you're not really selling things as much, you don't have the realized losses to offset those profits. So basically at tax time, you're going to be taxed on your dividends no matter what you do. It's still taxed as income in most cases, regular income. Ordinary income. And that's a roughly 37 to 40% rate for me as an individual. Now, if I don't have anything to offset that, it's just like collecting another paycheck, but I need to be able to take taxes off of that without bankrupting myself. So in this circumstance, I'm just offsetting it with P&L losses, right? So that's kind of why I don't really care about taking too much of this. And it was, again, a calculated risk. I knew it was either going to go all the way up or all the way down. I don't really care emotionally. because it was one of two possible outcomes that I acknowledged before I put a single penny at risk. And that's what it's all about. One other point that I need to make right now is that you can see that overall, this is only 24% of the account. I know of another account challenge person today that lost 60% of their portfolio and they didn't have any passive income. So you can take all the speculative trades in the world, but if you don't have that safety net, those boundaries in place, if you lose and you don't know how to recover, you don't have a passive income safety net, that's all you got. You're not going to be able to make that back unless you do more speculative trades or unless you shift your assets over into passive income. So just by default, the way that this is set up, right? I blew the entire speculative amount for the entire month in one trade in one day, taking a huge risk with dual outcome. And I don't really care. It's awesome that one of these two results happened. But I've protected myself. I've protected 75%, 76% of the capital in this portfolio, which means that next month or tomorrow even, I'm not starting at $0. I'm starting at 75% of what I had, and that's locked in, right? The only downside now is that I can't use the money that I lost today speculatively trading. So what can I do? The first thing I can do is I can just wait for those dividends to roll in, right? That takes time. It's very slow. It's very small. Another thing I could do, I think I have like $15 left on this for speculative trades, and that's probably just what I'll use. But another item that I have in my repertoire here is I could just go out and do side gigs. I'm a web developer. I can just build a little website for a little mom and pop store. I can, that's a couple $100 right there. I can go sell stuff online. I can go resell. There's all kinds of things I can do. The weather's changing. I could do some landscaping. I'm in good health. I could shovel some driveways. Whatever it takes to get a little bit of extra income is worth doing in most cases. Now, that doesn't mean that I have to, right? That's only if I want to do more speculative trades beyond the $15 that I have left, okay? So if I don't want to trade anymore, like I'm probably going to be very busy for this month. I don't really think I'm going to be doing a lot of speculative trades anyway, so I might just go out and get a couple $100 and throw it in. But that should be the role of how we manage our money. It should just be little side gigs here and there. I'm not taking the bulk of my income, my hard-earned income, and putting it into this to speculative trade. And I'm not selling these positions that are already solid and collecting income on my behalf. I'm not selling those and exiting them just to do more speculative trades. That is counterproductive. It's a waste of money, and it's really, really bad at tax time. So I'm not doing that. But what I will do is I will track this loss, this 440, and it's not going to settle until tomorrow because it's a 0-day contract. It'll be out of my account tomorrow, and tomorrow we'll show a realized P&L of negative 440. So what I can do at that point is I can just realize that I have $440 in the loss category for P&L, right? That's a realized profit or loss. And I've got a set number of dollars also in the profit category. Okay, so if I take all my profits for the year that aren't wash sales and I add them up and I apply a rough 37% tax rate, I'll get a certain number, okay? If that number of the taxable burden for my realized gains exceeds the 100% of my losses that aren't wash sales that I've realized, I will have a tax burden that I have to pay. So that's probably going to happen just because I deal with more money. And that's okay, right? Because I have other deductions. I have other means of offsetting these things. But as far as just the P&L, I can offset 100% of my losses against 37% of my capital gains, and I can break even essentially as far as the taxes go, right? Every dollar that I reduce my tax burden by increases my refund in other departments. So I can make money by losing, kind of. Obviously, it's not the desired outcome, but losses are not necessarily something we need to be afraid of. So this might seem like a big number right here. It might be $440. Oh, it's 24% of your portfolio. I get that, especially if you're a new trader. That might freak you out. But I have to realize two things. First, it's not 90% of my portfolio. I still have plenty left, and I just don't trade for a while. And also, that's beneficial to me because it offsets the dividends, the passive income, the realized short-term capital gains, and all that good stuff that I get from my other trades. I get 100% of this back as long as I don't, rush into this again tomorrow or within 30 days and wash sale it. It's not goodbye. It's see you later, right? So just understanding that and knowing that, we don't have to be master traders and we can take big risks like that occasionally. I'm not going to do this tomorrow or the next day. I'm not going to sell all these positions and then just keep throwing them at SPX because that's crazy. A, I lose a tax benefit. B, it's not good for your mental health, so don't do that. And C, it's not fun, right? I prefer the challenge of racking up bigger positions over time. And I know that if I want to go out and have fun and do this casino money thing, I can always just do some side gigs, get some extra cash put together. And that's what I'll probably do. I'll just do a couple little side jobs throughout the month. Maybe I'll, $50 here, $100 there. It's nothing major. And I'm trying to keep that relative to the size of this account because I know that not everyone has, $500 a month to put in. And that's okay, right? You don't need to. Some people just put in $10 a week, and that's more than enough to get started and to get things growing. Another strategy that we discussed was rolling X dividends, and that just involves buying and selling dividends just to collect their payout. And you can do that the same way I'm doing SPX and SPY. You just buy it before the X div date, you collect the payout, you sell it, and then that difference in price when you bought and sold, that is a realized profit or loss. And you can, again, if it's a loss, you can claim 100% of that as long as you don't wash sale against the either short-term capital profit and the dividend separately. They're in two separate columns. Or you can just hold the dividends and stop selling after a while. After you've hit your max loss contributions, or your deductions, I'm sorry, for the year, you can just stop selling them and just keep racking up dividends into the new year. And that's another thing that I plan to implement on this portfolio here. So ultimately, yes, I took a big risk. I took a leap of faith here, and it just didn't work. I got the right move, but the wrong contract. That was a miscalculation on my part, and that's okay. It's not the end of the world. I'm not, going to quit trading. It's not, 90% down and I'm despairing and trying to figure out how I'm going to tell my wife and all this. Like, it's trading. It happens. Obviously, I overcommitted. I took a big risk, and now I just get a slightly bigger reward at the end of the year, and that's okay. In the meantime, I'm just going to go out and get some more money, through other passive means. Or if I don't want to do all that, because I probably don't want to do too much of that, I just won't do speculative trades for a while, or I'll just do it on the smaller amount that I have left in settled cash. So important lesson here. And it was a really good opportunity to kind of describe that. I've been trading for a long time, and losses do happen no matter how long you've been doing it. It's okay. I kind of figured this was going to go down to zero. It's SPX. It's very risky. It was a 0-day contract. They move very violently. And most of the time I would have just cut it at like 30%. Would have had like one contract, but I figure why not? It's just a good opportunity to demonstrate, things go wrong. And again, there's just no stress because I get it back at the end of the year. So I really just don't care. So zero emotional attachment, and I'll just keep trading this account and just keep rolling it up. I'll see what I can do with that $15. I'll add in a little bit here and there, but ultimately what I'm interested in is racking up these dividend positions, and that's what I'm doing. You can see here that the days P&L, or this position here, is 440 in the red. My speculative amount for the month is 510. So there's a $70 difference there, and that $70 difference is in dividend positions. I racked them up a little early. I bought that extra share. So that already protects me from these kinds of decisions. So I don't have to worry about, will I get this trade right? Will I get this trade wrong? Will I be able to cut the loss in time, or will it just move really fast and lock me in? And that takes a lot of the emotional toll out of trading. Again, I take a lot of comfort knowing that I'm going to get 100% of that position back at the end of the year, and that it's just going to be offset against other income. So if you're struggling, or if you're, constantly running into that wall of trading SPY, do yourself a favor and find a way to not trade SPY so much. And I know that's the equivalent of just telling someone who's upset to just smile. But if it helps you put that boundary in place where you can tell yourself that you need to stop trading SPY, or just re-entering after you lose any position for 30 days or whatever, I think it's helpful to understand that if you do, you can get that back at the end of the year. So you don't have to worry so much about taking losses and then trying to get them back and all that good stuff. Because if you're just trading one ticker in and out, in and out, in and out, you're going to hurt yourself. And at tax time, you're going to have roughly 37% of your profits that you've realized to pay taxes on. You're going to have a tax burden, but you're not going to have any of the losses because you keep wash selling. So you're sacrificing your losses for good. Whereas right now, I just put this in an investment fund basically for the IRS to hold on to until tax time. Then I get it back. If I re-enter SPX within 30 days, it's gone. It's theirs. They keep it. So think of it like a deposit on good practices and good habits. And that will hopefully help you not feel compelled to just trade things because you can, or just because you're trying to get your profits back, because that rarely works out. And even if it does, again, you have that tax burden to consider at the end of the year. So I'll keep this video relatively short, but I just wanted to kind of use this as a really good example and just let everyone know it's, even if you get your butt handed to you in the market, as long as you have other things in place, it is okay. Don't beat yourself up. Don't give up. Don't get frustrated and, bitter at the market and say, oh, they're taking all my money. This trade should have worked out. This trade did work out, but I picked the wrong contract, and that's okay. Because again, I was looking for a bigger move. Didn't happen. I got too short an expiration. I know that. I kind of figured that was going to happen. And it just didn't work out. So I can't control that. What I can control is what I do next. And what I do next is I wait to trade SPX again, at least until the new year, so that I get my capital loss back on my taxes. Okay? Doesn't matter where the losses come from. Doesn't matter where the profits come from. It's how you work them off each other that matters. Okay? So I'm going to end this recording here. It's about 16 minutes long. I don't want to go too far, but I just wanted to say that I'm back from vacation and we'll just keep working on things. And this is kind of cool. It's a weird feeling to feel good about losing.